Up only.
10, 9, ignition sequence start. 6, 5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
Up only.
Hello and welcome to Up Only TV. I'm Ledger, here with Cobie and our special guest in just a second. Before we get to it, I want to let you know all about Blockfolio. Go to uponly.tv/Blockfolio. Trade today on Blockfolio with zero fees. You can swap directly from one asset to the other. It is a seamless and delightful trading experience on mobile. You even get a free coin with every trade. And of course, Blockfolio has all of the portfolio tracking features you've loved ever since 2014. It's been around for a long time. It's a great product. Now with trading fully powered by FTX books, thanks to Blockfolio. Go to uponly.tv/Blockfolio. Cobie, hello.
Hello, mate.
How are
How
you?
you getting on?
I'm doing well.
Not too bad. Not too bad. Paolo, how you doing?
I'm doing well. Thank you, Cobie. Thank you for having me.
A good day for you. You have your attestation or whatever it's called. How you feeling?
Well, I'm feeling really good. It's been a pretty exciting moment for us. So I just appreciate all the work that the entire team did to achieve this amazing result finally.
Bitfinex is in disbelief.
Yeah. I mean, I often think back over the last sort of 8 years that I've been doing crypto stuff and go, wow, it's been really crazy. But then when I reflect on it a little bit more deeply, I'm like, I sat in my bedroom for most of it and stared at charts. Whereas you've had like a really weird decade. You've had a really, really bizarre time, I imagine. I'd love to start off by I guess reminiscing on the old days a little bit, but I'd love to know what you see as like the biggest change in crypto from back when you started. I don't know when that was, 1999, and to today.
Well, I started reading Bitcoin white paper in 2013, but it was the end of 2014 that I was approached by Giancarlo, that is Bitfinex and Tether CFO. He was interested in having my consultancy to fix some issues of Bitfinex trading engine platform scalability. So yeah, it started at the end of 2014 as a contractor, was working part-time. I had my cloud portfolio management system company in London. And then, I got sucked in at the end of 2015. I was doing much more for Bitfinex than my own company. And then started doing a bit more in 2016. Things were going really well. The matching engine was starting to perform well. The APIs were pretty cool, great advancements. And then, of course, the hack happened. And then I was asked to become the CTO there. That was quite an interesting week for me because the entire platform to be brought from one infrastructure to another, but team made wonders, and we were back up after 7 days. We were start trading again, and we were back top one volume. That was the first really big slap that we got, and that I got myself in my life, I would say, and it was a really interesting teaching moment. And back in time, I felt, especially when I joined in 2014, I think that my first impression of exchanges was, okay, these are basically e-commerces that are hiding, that are basically calling themselves trading platforms, but most of the websites or most of the trading platforms were really e-commerces, like PHP, style of things that were serving few hundreds requests per second across all the user base. They were really slow. So I mean, now the situation is much better. I mean, we are seeing technological push on centralized exchanges, and of course all the development in all the different blockchains are really pushing for, they are setting really high the bar. I believe that the biggest change probably is yet to come, and I started in the Wild West, and regulations are catching up.
Yeah, I imagine that would have been the biggest change. Like running an exchange back then to running an exchange now must be super different. I do want to ask a little bit about the hack. I don't even remember how much was hacked at the time.
119,000 Bitcoin, around $72 million at the time.
72.
Don't make the calculation right now.
Yeah,
I'm really tempted to know what it is now. It might be nervous.
I don't want to think about it. And maybe this is kind of like the lost pawn theme. But like, what do you do on the day when you realize, like, what happens? Like, for the team, it must be mortifying. But like, what happens in, like, do you go straight into like damage control?
Yes, first of all, is assessing what the hell happened, and the first, I would say, 10 minutes are frustration. You feel really bad, you feel terrible, and you keep feeling terrible for almost perpetuity, right? Because the loss is big. They are not your funds, right? So the first thing that you think about is you let down your own customers. That's pretty annoying. That's pretty sad. So, but then you start thinking, okay, how I have to do something. Crying on myself doesn't change anything here. So first, Giancarlo, Phil, and Stu at that time. Phil was still with us at the time. They were starting working on the financial recovery and the plan for getting back up to speed on the financial side, and I had the task of investigating the issue, making sure that to fix it and move the entire platform from the data center where we were to AWS just within 1 week in order to get back up and running. We thought, okay, if we I think that the Giancarlo, Phil, and Stu came up with these BFX tokens were really an amazing piece of history, I believe, that showed how a company like us could recover in good faith from that type of issue. And after we started, we are seeing our volumes growing. The first month, the idea of the BFX tokens was pretty simple, right? We were always redeeming those at $1. So there was a market. You could buy those on the market. The moment the market started, they crashed to 20 cents, but you could always buy back we were always, as a company, buying back them at $1. But of course, no one was believing that we would make it. Then after the first month, we were back top one volume and revenues start piling in. So we started buying back the first chunk. And then people start realizing that there was a really tiny chance. Then the second month, we were buying back more and more. And then we introduced some of the possibility to convert the BFX tokens into Bitfinex shares. And a lot of users, well, at the beginning, not many, but the months were passing, we were making more money, we were buying back more tokens. And eventually in 7 months, I would say I could recall it not correctly, but 2/3 were converted in equity and 1/3 was bought back from the market. So yeah, something like that. And it was crazy because in 7 months we were back. We were clearly the top one exchange. We were running really. Our operation increased by 10 times. And we were able to pay back $1 for $1 that we lost. So I think that was a really interesting moment. Let's put it that way.
Do you think if things like this happen today to an exchange that would be as new now as you were back then, do you think it's a survivable event in today's landscape?
Well, I think that it's probably is much more complicated. I believe that the size of the operations of exchanges grew 10, 100 times. So it's much harder to, but there are many more eyes. I believe there are many more people involved with code reviews and so on, right? So that's the thing that I pushed for when I became CTO. So I started forming a group of developers. I was in control of the entire security. So I started shrinking the accesses, removing using hardware keys and things like that. So now, that's now something that is pretty common. But back then, there were the knowledge among who was running exchanges was not as good as today, I would say.
Yeah, I think that makes sense. It's evident in that a lot of the large losses, like back in the day, it would be an exchange goes down, like Gox, and then there was Crypto Rush and CoinUp, and like all these exchanges that like one would just randomly disappear one day. I think MintPal was quite a big one that disappeared, and it seems like all those exploits and all those money where it just goes missing, you wake up and 20 million's gone missing. That's all just moved into smart contract risk now, or a developer rug pulling. When you were talking about the matching engine working well, I remembered trading on Crypto Rush, and I had this really big altcoin position, and it was the only exchange that it was traded on. And I did what the logical thing, what any good trader would do, and I wanted to market dump. So you do the thing, you look in the order book, you click an order really far down the book, and then you click sell. And this exchange had no matching engine at all, so it just sold everything to this one guy and left the remainder of the book there. No magic. I was like, what? I like broke even because I like sold it all to some other dude.
So it started your order at like the max slippage that you were willing to tolerate, basically.
Yeah. I just sold it all into that bottom order. There was no matching engine.
That's awesome.
That was what it was like back in the day. I hated that exchange. But I'd love to talk a little bit about like Bitfinex's tech and at least why I still use Bitfinex today as my sort of primary exchange.
Cobie, before we get to that, there's like you guys are too OG and you know stuff that the audience doesn't know, and I was too noob for still. But like when y'all did the redemption tokens and we're doing these like exchange tokens and some of that stuff that people think of exchange tokens as pretty common and typical now, but like what was the landscape for exchange tokens and the kind of structures that y'all put in for like mitigating a hack, and like was there any precedent for that at all?
Not that I know. I mean, I'm not sure that I don't think, or I don't recall any other changes ever did that. So, as Tether, this was, I believe, as a really awesome creation of our finance team and the strategy team. So, yeah, I think that now that definitely are common, especially in 2017 with all the ICOs and new exchanges that were popping up. Many of them were raising money through ICOs and through their tokens. But in August 2016, I believe that weren't.
Yeah. Okay. Now you can get on with the Bitfinex still.
Yeah, I mean the show's called Up Only, and Bitfinex is literally Up Only. I want to give you an opportunity to chat a bit about what changes you've made, because I guess this experience won't be unfamiliar to many people viewing that use whatever exchange they trade on. But a lot of time in the peak moment when you want to be trading the most, the exchange is down. It's just not there. It's like, sorry, we're currently offline. Like, what do you mean you're offline? It's an all-time high. I need to be taking a position now. Or it's like dumping like crazy. And it's like, yeah, exchange is actually going to go down for 20 minutes now. The main reason I still use Bitfinex after all these years is because I never have that experience on Bitfinex. The exchange is there, it's still working, no matter what is happening in the market, no matter how many other exchanges are down. Can you tell me a little bit about like how you've achieved that and how that's important to you?
So, well, I started coding when I was 8, right? And I'm really annoying with coding. I really spend all my youth in doing that, and till today as a CTO, I spend most of my time in coding. And I really, when I build something, and this is what I tell to all our developers, is that you have to be prepared to resist to the wrath of God, right? It's whatever happens, I don't want to see things that they resist or they are able to handle what we are expecting today, because really does not make any sense. I believe that we have seen clearly in 2017 that exchanges were not ready, and we had like 3 years to be ready. And somehow some exchanges are yet a bit, I would say, didn't perfection their technology. So the way we design our matching engine, first of all, as I said before, I think that most of the exchanges back in 2013, 14, and 15 were like e-commerces, masked by trading venues. And then when I joined Bitfinex, the matching engine was doing like 50 orders per second. That is really terrible. If you think about also, and one of the first exchanges that was doing margin trading, it's quite bad, right? Because then if you have a liquidation, you have to liquidate. So you have, an order position that you want to liquidate, you have to, you put it through the order book, and then that might trigger stops, that might trigger other liquidations and so on. So you have to be extremely fast, right? So 50 orders per second are really useless from an exchange point of view. So instead of trying to replace the matching engine with something that we could rent or buy on the shelves, I decided to, I promised to the management at that time to start improving it piece by piece. So I started, changing the data structures behind the matching engine. So instead of doing a really terrible thing that a lot of developers use, that is, an array that imagine that you have bid and ask, you have like a list, and they keep the common thing is, okay, every time I get an order, I will keep sorting it. So that is completely inefficient, because you lose a lot of time in keep sorting your list. So the clear thing to do is using structures like AVL trees or red black trees that are are basically sorted trees. So in that way, you can you can reach out to you can have a sorted bid and ask tree in a matter of microseconds, if you will. So if you test end-to-end the binary tree in order to keep adding or removing orders, you can easily get to 1 million orders per second, 2, 3, 4, 5, depending on the programming language used. So basically, I started swapping pieces of the matching engine and eating more and more in performance. And, after 1 month, we were, 150 orders per second, then 1,000, 5,000. Now we are several millions per second, because the way our matching engine is made is sharded, right? You can run multiple pairs on one single on multiple CPUs. Well, let's say that you have 300 pairs, you have 100 cores, you can basically shard 3 pairs per CPU, and it's pretty cool. It allows you to exploit all the beefy machines that you can find today. And then also message queues are of course one of the most critical things. A lot of exchanges, at least in 2017, they were still using MySQL as their source of data for the order books, and that's pretty bad, right? Because MySQL or in general databases have locks, so you keep trying to keep hammering them as fast as you can, but they cannot cope, and eventually you will get in a either a deadlock, or anyway there is they need to flash on disk. So you have to really engineer something that is properly custom made for being a matching engine. So that is the thing that I brought in Bitfinex. And the other cool thing is that when I joined, I recall the order book, there was updating every 5 seconds, right? It was not WebSocket based. So you could see, you had to wait 5 seconds in order to see the order book. It was like crazy. I was looking at it and saying, okay, that's after the matching engine, that's the next thing that we have to change. So that we introduced WebSockets, and now our platform is, and one of the reasons why our platform is extremely stable during windy days is that is WebSocket first. So you get, you can send orders, you receive trades, position updates. You can do almost everything by WebSocket first. So you don't have REST requests keep opening the socket with the receiving server. So every time you put pressure, you have a handshake with the receiving server. So if you have 1 million it's really hard to handle 1 million orders per second if you have to handle those by REST requests, because that means that for every one of those, you have to do multiple actions. You have to establish a connection, do an handshake, and so on, right? And then close the connection. WebSocket is always open. You can slurp as many orders per second as you want, basically.
So,
do you think anyone in chat followed? Do you think anyone in chat knows why Bitfinex is? Let's have a look.
Yeah, they all said no. Just what y'all need to know is that it's a lot of code. They're smart, and it's a scalability difference, right? So, I think one of the things I wanted to ask along these lines is not to mention any of your competitors, but they're BitMEX, and like every time they added a pair, it was like the whole thing melted because it completely added like an exponential component in terms of like calculating available margin and like what's there. So the only way to really reduce the load was reducing the number of pairs because they didn't have to match it against yet another thing. Like, how do y'all scale cross pair, especially in terms of calculating margin and like keeping people's accounts in order?
So that's a really good question. BitMEX started using KDB, if I'm not wrong, as their matching engine and data integrity system. So in that way, what they do every time there is a trade, they basically recalculate the risk factors for all the different users, for all the different accounts, right? So that is a really good way to do it, but is of course extremely inefficient because adds, as you said, a big amount of complexity. So Bitfinex started as a margin trading platform. So our leverage was 3, and now is maximum 10x on BTC USD. So of course let's do a step back. The reason why they had to do it is because they were offering 100x, right? So 100x means that if the market moves 0.5%, you get liquidated. Now, that's a really big risk, right? So if you have only 0.5% margin, then it means that, if you don't do things properly and if you don't liquidate early or exactly at the moment, you lose money as a trading venue. And that's really a bad thing. Now, Bitfinex never had to do that because we were allowing 3.3x in margin. So the minimum required margin for maintaining an open position was 15%. So much more time to liquidate a user. So we could be much faster than BitMEX just because of that. Now we launched perps, right? So because of that reason, in order to be extremely cautious, we started with isolated margin. So you have actually to allocate margin and an amount of USDT as collateral to a position. So you can exactly know the liquidation point without any risk, right? So we don't do any cross margin there. Because I wasn't really happy or satisfied about the speed of our liquidation engine at 100x. And now with the new version of the matching engine, and finally redid all the math, improve the scalability by tenfold. And now we can offer full cross margin. You can, I tweeted that you can use sheep, horses, and, mushrooms, lions and Leos and BTC, whatever you want as collateral in your position. Should be live by mid-May.
Extra degeneracy for everyone.
Yeah, exactly. But there will still be isolated margin mode, so you can still be cautious and take less risk. But I believe that the way it works is that is kind of probabilistic. So what I code in the system is that I build a probabilistic tree of for the liquidation. So I always, every tick, I just have to, every time there is a move above a certain percent, or a certain ratio, I just have to check the first few of the tree and see if I have to liquidate them and so on. So I basically try to reduce the amount of operations that I have to do in order to recheck everyone. So I don't want to recheck everyone because maybe you have 10 million users, and that would cause problems. You cannot really go fast at that scale. But instead, if you say you have to look only at the top 100 because they have the worst risk ratio, then it's much faster. You can handle almost any amount of liquidation. Of course, then even if we have to recheck everything, given the fact that our matching engine is parallelized and is sharded, we can still cope with, even if we have to liquidate many more people, or there is a big market spike. So I think that it's just a matter of being comfortable and coding things well. And I just didn't want to throw it out there yet. But now we are getting ready. Sorry for the long explanation.
I like how you described that of you liquidating them as though you did it personally. Like this user, yeah, let's liquidate that one.
So, Cobie, which user is that?
Liquidate him. Fuck it.
The Tsar of Rugistan said, "Where can I buy these WebSockets?" Paolo was talking about.
I like it in chat.
Or WebSockets in altcoin.
In chat, they briefly turned them into WebSocks, which is the original version of Unisocks. On the expansion of leverage and the increase in multiples of leverage available, do you think the reason Bitfinex's liquidation volume has been much lower than other exchanges is because you've been conservative with the amount of margin you offer to people until recently? Or do you think you just have better traders?
Well, I believe both, right? So we have, first of all, I think that, if you look at our open interest versus volume, I mean, our open interest is around 1 billion probably as of today, and volume is not really high. So, I mean, we are probably the exchange with the best ratio in that sense. So that extremely helps. So of course, liquidations also count margin, but margin have, of course, a lower max leverage. Also, I believe that the fact that curves are still in isolated margin only really helps as well. So it's a multiple factors that makes us a safer location. And also, if you look at the order books, the BTC USD order book that is part of our index is extremely liquid. So it's probably 2-3 times more liquid than the average or the top tier competitor. So that is another factor that is extremely helpful. We by history we have a lot of whales. We have been focusing on professional traders. So we have some users that have and companies that have massive accounts with us. So they provide liquidity in an extremely professional way and with big sizes.
So at the risk of showing off Cobie's orders, I pulled up on this stream. There's a website called Tensor Charts, and it'll actually show where orders exist at certain levels. And honestly, I really like using Bitfinex as kind of the smart big money, because you see here's somebody with giga orders at 50K. We are just not going to go below 50K. And I think that's been one of the things that I see the most on Bitfinex is it's not necessarily that you've got every pleb like me with $1,000 order here or there, but it's when somebody's coming in with 7 and 8 figures, you'll frequently see those orders in cash, not just on 20x perps, but in cash or low margin on Bitfinex.
The Bitcoin Wisdom version of this chart is very beautiful. So you can get the same chart only for Bitfinex on bitcoinwisdom.io. It looks like you're looking into space. In case you've taken some substances and just wanted to watch a chart.
Cobie, the chat wants to know, as a resident Bitfinex whale, does it feel good to like put an order in and then see yourself like on these charts where it's just like this solid yellow line of support?
I honestly don't ever use that chart ever, except like sometimes when I'm feeling a bit wavy and it looks pretty and I like go, whoa, that looks cool. I only really discovered how it worked not too long ago when someone was showing me it, and I was like, this is the ultimate psyops chart. Like, this is just several people with a lot of money psyopsing each other out. Like, I'm going to put it there and I'm going to pull it. No, I imagine so. Sometimes you see a chart though, and you have a look at them, and you see a line that was just left, and it never got there. There's like this huge chunk line as it keeps going. It never goes near it. They never got filled, so maybe they're sad. Yeah, the Bitcoin Wisdom.io version is much prettier than the one you just had. Looks like looking into space.
Okay, well, sorry to Tensor Charts for Cobie blasting your UI.
Yeah, yeah. Did they pay you to shill tensor charts on the?
No, it's just one of the first ones I saw that did this. You can use whatever you want. Don't use Tensor Charts. Tensor Charts freaking sucks.
Paolo, and how has Bitfinex's approach to like non-Bitcoin cryptocurrencies evolved over time? I think there was a legendary quote from Phil once about having to have a particular coin listed. How has that evolved over time, and how has having like a token ecosystem made it easier, I guess?
Yeah, Phil really should sell T-shirts with that sentence. Yes. So I think that we of course altcoins made our fortune for as many other exchanges for many other exchanges, right? So you start from Bitcoin only, but unfortunately, but also as you would expect, with diversity, more people will come. They can find more things to trade. So they want more and more things on the shelves, and that's perfectly fine, right? So, I consider myself a Bitcoiner in deep, but also it's important to understand, when people approach me and say, well, why you list so many things? And say, well, it's important that I need to wear different hats. And, I wear the Bitfinex hat, the Tether hat, and Bitcoiner hat, right? So when I have to, yeah, of course. I mean, it's like it's called the crazy hat maker in Alice in Wonderland. But it's really an interesting challenge, right? Because you see things, you sometimes there are things that you like more, you like less, and so you have to find your own balance. But ultimately, it's important to remain true to the people that help you to get there into this position. You have to remain true to your shareholders in Bitfinex, and I believe that is, if the market wants more pairs, more tokens, that is fine. And what I like about my position, for example, as a Bitcoiner, is that I can actually use the part of the profits that the companies make in trading all the kind of products to reinvest in Bitcoin, Lightning Network, and so on. So I feel good in the end of the day, and I believe that people should be free to trade whatever they want. With, of course, limits, but I believe that people have the right to choose.
So you are not a mooncat collector?
No. I usually trade. I usually buy only Bitcoin. For myself, I buy just Bitcoin.
So I'd love to chat a bit about. So you got into crypto in 2013 and had this crazy experience with Bitfinex and Tether, sort of since then, becoming CTO of both. And you've now mentioned that you just buy Bitcoin. You keep a portfolio of Bitcoin. Have you branched out and done much else in the ecosystem? Has it always been this way? Like, keep it simple, keep it focused on these things? Do you do personal investments in stuff?
So really, I like to do investments with the companies I'm part of. So I believe that my for my role, I really cannot dedicate as much as a real investor would need to dedicate to a project, right? So I'm not prepared and ready to become a VC personally, and I believe that I can obtain much better results if we invest as companies and groups, right? So we invest in Bitrefill. We invested in I probably shouldn't say that.
No one heard it anyway. No one heard it, right? We can just scrub that from the stream.
And we invest in Celsius and so on. So, well, I probably will get slapped really hard after this. No, it's part of my job. And I'm like the punch bag sometimes. Well, many other projects. So yeah, I think that it really.
I noticed how the list stopped. The list was like, and some others.
Oh yeah. Many others. Well, there is Ellen Markets that is really cool. That is public, right? I mean, I'm pretty sure that is public.
I don't even know why it wasn't allowed. We weren't allowed to mention it, so I'm going to go research afterwards. And if you were, if you were younger you getting into crypto today in 2021 for the first time, what would your approach be today? Because you were approached to join Bitfinex, and over time you became the CTO. But what would your approach be today in like an ecosystem that's a little bit more established, a little bit more, a lot more opportunities, and a lot more VC money pouring into anything with a good PDF?
So, if you are a VC that is not coming from the crypto world, you mean?
If you're a developer, if you're younger you.
Oh, yeah. Okay. I would probably. That I'm quite an advocate on keeping protocols agnostic from tokens. So I think that tokens are definitely fine, but I'd like to see protocols that are kind of independent from the tokens. So what I believe that most of the community now is focusing is DeFi projects that are definitely interesting. Some of them are definitely interesting. Some of them pose too much risk for the ecosystem because of security reasons in general. So there is a lot of poor coding around. So, but what I would like to focus on more, if I have more time, even in Bitfinex and Tether, and we are actually starting to collaborate with a couple of external groups on this topic, is to focus on retail-focused services, true peer-to-peer, privacy-oriented retail-focused services that are that use crypto as a payment mechanism, rather than having it's like today we are on Zoom, but like proper peer-to-peer clones and privacy-oriented of actual softwares that we use in the day-to-day life. I believe that in general, so from what I'm seeing, is that also due to the pandemic and so on, I really feel like privacy is going to become a more and more forgotten and precious asset in the future. So if I had more time, if I was a younger myself, or in the future, if I will have more time, I will definitely focus on that. More a way to give to people back the internet, to allow them to keep their information with themselves, to share the information only with what they want, to access services in a peer-to-peer fashion with simple protocols. You can still pay with Bitcoin, whatever crypto asset you want, right? So it's not like, I just don't like things like this, like services like this, completely bound to a single currency, to a single crypto. Sometimes people tell me, yes, but you have to build a community. But I believe that that is true, but in some sort of way, tokens are, in my opinion, a friction to reach mass adoption. is they are great to spawn a good sized community that can go from 1,000 to 50,000 users or even 100,000. But then things become too compartmentalized, or there are too many different communities, there are too many religions, if you want. And I believe that tokens can represent a really a break to mass adoption rather than to be a fuel for mass adoption. So I'm actually focusing my spare time and advising a few projects that are researching on pure peer-to-peer protocols that are token agnostic, that just focus on building, a more private version of the internet that is safe to use.
Do you think these values that I think were a lot more present in pre-2013 adopters, do you think they're rarer now? And I mean, this focus on like self-sovereignty, ownership and privacy of your own data, and the ability to interact without a middleman. Do you think they've been lost in the crypto ecosystem today, where people are building things like BitClout, where you put a token on anyone?
Well, I think that, of course, money is a good driver for everything. So, of course, I believe that put it in a simple way, until regulations will step in a really hard way, I believe that this is still the time in which who builds a project tries to use a gray area and make a really ton of money out of it. I believe that this moment will not last forever. So there is always this spike, I believe, in history where new technology, everyone jumps in trying to do the craziest things possible, then regulations step in, and then there will be an underground part that will focus on values like privacy and so on, and then more like mainstream part that will be fully regulated and so on. And if you think about it, it kind of is really interesting what happened to Signal, right? So it was pretty famous before 2021, but after WhatsApp announced their changing policies, and Signal grew like 10 times and even more. So I believe that there will be time in which masses will understand the value of privacy, and they will look for products that are extremely privacy oriented.
It seems like it always goes that route, though, right? Like nobody cares, and then there's a huge privacy breach, everybody cares, and then like the attention fades over time. Like, how come you think privacy initiatives don't really seem to stick for very long?
Because privacy has been always a synonym of bad user experience in some way. I think that is one. I mean, if you had the same thing of WhatsApp, but completely private, you probably would use that, right? So Signal is a great tool, but it wasn't as good as it is today 1 year ago, or 1.5 years ago. Yeah. So I believe that it takes time and resources to build extremely smooth user experiences, scalable, things that won't break with when more users will start using them. So I believe that, and also there is a lot of research going on in protocols that have to support these tools. So I believe that now we have enough attention and enough people that have basic cryptography knowledge that we can achieve those results faster. So I don't believe that in the future, Google, Azure, and AWS will host the majority of the web. I believe that in the future, we will see a decline of their market share. At least that is the thing that excites me to think about, and how to make we could help to make that happen. And the good thing is that a lot of companies in our sector are making good profits. So before, if you had to create a competitor of Google, I mean, how much capital you needed? It was almost impossible. But there is so much capital flowing into crypto that nowadays is something that is not so is quite achievable, I believe.
I'd like to ask you about decentralized finance, and I spell it out because not necessarily just in the sense of where we see DeFi today and, you know, lending protocols and all the new fancy stuff, but like Tether was really one of the first steps in crypto at all in terms of practical DeFi, because someone could stay on chain and be on chain. You don't have to go to USD on some exchange. Like, you just have USDT and you have the power to be flexible with a stable coin. So like, what do you think is important in terms of DeFi priorities and what people should be focused on, and maybe the role that stablecoins play in that? While Cobie's video went out, I think he's still here though. He's back.
I don't even know what happened. I just saw the box went dark.
So I just believe that stablecoins are definitely one of the most interesting innovations in the sector, and they are, if you think about it, they are really not. I mean, they're pretty simple, right? So the thing is that no one was thinking about them in 2014, and believe it or not, it took a long time for Tether to explain, even to other exchanges, why it was important to have a stable coin. So, of course, yeah, it's true. I mean, it was hard to explain how crypto arbitrage would have been much smoother to all the other exchanges in 2014, 15, and 16. Then I believe Poloniex was the first one that really supported Tether in full. And that was... Yeah.
Well, semi-RIP. I mean, I guess they still exist, but RIP Polo. We can just go ahead and say.
And 2017 was really the moment when Tether grew a lot. At the end, it arrived to 1 billion. So yeah, I believe that staying on chain is extremely important, but also, and I'm not sure if I'm going to diverge from your point here, I believe that one of the interesting things of DeFi has always been in people's mind two things. So non-custodial and no KYC. So I believe that it will soon change in being just being non-custodial, right? So when we chat with regulators, when we discuss with other, when our CTO discussed with his counterparties, and when we look at the different regulations, it's clear that eventually there is an interest from regulators that are quite slow to catch up to also start regulating automated market makers or things like that, right? So the concept is, if you provide liquidity to someone that is laundering money or possibly doing some terrorist activity, I mean, you cannot hide behind your finger and saying, I'm using a smart contract. That's the point of what regulators are making. I'm not sure when it will happen, if eventually it will happen. I'm being told that in the next years there will be an increased aggressivity on that side. So eventually, I believe that DeFi projects will still have the big value of being of allowing non-custodial transactions. So that's pretty cool, right? So you don't have to trust necessarily an exchange or a private party. So that is still a big value proposition, and I believe that it would be pretty interesting to start seeing DeFi projects to work with decentralized ID projects, so that you can, with KYC providers, so you can unify the three parts, and you can start creating the first KYC-oriented liquidity pools. And I'm not saying this in the light way. So as I mentioned, I'm extremely pro-privacy. But again, I have my Tether and Bitfinex hat on, and that is what is happening. So I believe that will be an interesting shift that we will probably see happening.
Do you think it's going to happen over the next year or so? Because I think a lot of people are, like, it's been spoken about for so long that I think people have sort of ended up in denial that this is ever going to happen. And every year it's like, the regulations on KYC are coming soon, and then nothing again. Like 2017 is like the regulators are going to be here any moment. I think they've been regulating parts, especially the centralized entities in the space are much feel a lot more heavily regulated now. I don't know if that's the reality. But do you think it happens this year? And how do you think the regulatory arbitrage between different jurisdictions having different levels of enforceability or non-enforceability will play out?
So that's a really good question. I believe that this year or next year is probably even too soon. But I would say 3 years' time is definitely a time frame that makes sense, right? So if you think about it, first of all, in 2018, from 2018 or 2017 to end of 2020, we kept saying institutionals are coming, but they weren't, and then suddenly they came. So I mean, you can think about the same thing about regulations. So eventually they will step in. I was talking to, I cannot name back, but one of the 4 biggest banks, the head of the trading desk, the crypto trading desk of one of the 4 biggest banks in the world, right? And he was saying, yeah, we are really excited about DeFi, but there is no way we can even touch that with even a long stick, because we get $1 billion fines if we do any. If we risk any money laundering activity. So that is one of the things that will push for more regulations, because this guy will definitely want to jump in, but that is quite a deal breaker for them. And I believe that in general, we have seen, there were many exchanges that were really, really in gray areas. So with the full no KYC or doing some dodgy stuff. And, from I can tell you from one exchange that we started taking steps in order to get away from different jurisdictions over the past years. We were probably the first exchange that decided to step away from US, right? And we did that at cost of business. So we decided that we prefer to ensure that we could meet or we could not trigger any regulatory issue and lose business rather than risk. I believe that is a big kudos to our legal team that decided that that saw this happening, and many exchanges didn't do that, and then eventually regulators are catching up. So I believe that is just a matter of time, and it will happen.
I liked the tale about one of the 4 biggest banks, and they can't get into DeFi, because what you're really saying is regulation is bullish. It's bullish KYC regulation.
Well, they have a lot of money,
billions on the sideline, just waiting for some KYC.
Well, when regulations started stepping a little bit more, you can see really more volume in exchanges, and the reason why Tether grew so much, because OTC the OTC desks that are Tether customers are really buying Tethers from Tether on behalf of hedge funds, on behalf of institutions that just want to split their checks into 10 times, send a portion of Tether to each trading venue and start buying on Bitcoin on each trading venue, right? So if you are like an institution, like let's say that you want to invest $500 million, you don't go one single USD based exchange and press a button and buy and market buy for that strike, right? The smart thing to do is, okay, there are 10 locations that use Tether, that support Tether. Tether pairs are the most liquid. Okay, so let's send USD to Tether. Let's get Tethers back. Let's split those Tethers in 10 different chunks, and do smart buying on pressure on 10 different exchanges. So that's and that was only possible because there is perception, at least from institutions, that there is more legitimization of the crypto space, and that I believe that in end of 2019, many exchanges started to increase their capacity of doing KYC. They started to raise the bar of KYC. They started to lower down the amount of Bitcoin that you can withdraw without KYC and so on. And again, I'm saying this from a big privacy fan, but and this is going to happen.
Yeah, that makes sense. I like the idea that the regulators they were so slow because every cycle they just thought that was it. It was the top. They were like, oh, it's a fad. It's over. We won't bother with those regulations because no one's going to use it anyway. It's a waste of time. And then next cycle, there's one guy like, shit, I didn't do any of the work because I thought it was. Am I going to get fired? That's my thesis on why the regulators have been so slow.
So I've got a chart of stablecoin distribution over the last few years, and Tether has grown a ton in cumulative, but almost all of that growth has been like Tether that's on ETH for DeFi, it seems, at least in net. I have two questions. One, how hard is it to scale something like Tether with a stablecoin? Because there's dollars and real assets that back these things that y'all have this accounting that you do. And then the second question is, what changes based on the venue where tethers are distributed? I guess you just don't care once they're created, right?
Well, yes and no, right? So it's not that we don't care. As part of our running stablecoin, you have the duty to monitor how the stablecoin gets used, right? So Tether is, well, I would say a few people know it because, at least not the Tether truthers, but the Tether is registered with FinCEN, and FinCEN is like the global financial authority, one of the global financial regulators, right? So we have to report if we see any suspicious activity. We are using chainalysis. We have to monitor transactions and so on. So that is something that definitely we have to do. One of the so Tether is pretty big on DeFi, definitely, and on Ethereum, but also you can see that there are a lot of tethers, more than, I think that was Larry from the block that said that there are more than 10 billion tethers held in a couple of Asian-based exchanges, just to give you an idea. So, and probably now is a little bit more, maybe it's between 10 and 15. So the rest is on all the other exchanges and then DeFi and so on. So I believe that is pretty even distribution. Also, the good thing about Tether is that there is all the perps, all the new perps are all USDT settled. So the collateral is USDT and so on. So it's also contributing to our monetary based growth.
How did you feel when you got the Tether Truth or FUD from a bunch of community members, but then also every now and again a big company would participate in it a little bit, maybe slyly, and then they all made their own stable coins?
Yeah,
because I believe that when we make a stable, one of the biggest challenges of making a stable coin is actually getting it traded on other exchanges. So especially if you are an exchange or there are already too many stable coins, but if you are an exchange and many exchanges made a stable coin, it's really hard to get traction because it's unlikely that one exchange will trade the stable coin of another exchange or create base pairs with that stable coin. So actually nowadays getting traction is on a stable coin is pretty hard. So I believe that the 3-4 that are winning right now, that are raising, are the ones that are here to stay.
What do you think about the dynamic stable coins that aren't like a pure dollar to dollar? They're algorithmic or blended or collateral based, but not by dollars.
So there are different types of stablecoins, right? So you mentioned, I would say DAI has multi-asset, multi-crypto asset backing. So definitely one of the most interesting one, probably the first one that seriously made it. And I believe that is a really interesting concept. One of the risks, though, of algorithmic stablecoins that have crypto that are backed by cryptos is that those cryptos, in my opinion, should not be centralized stablecoins. Otherwise, there is the risk of just become a proxy. And that is completely useless then, because you lose the peg with the dollar, because we have seen stablecoins, algorithmic stablecoins start floating a lot, but then you have and you are just a proxy for the underlying. So I believe that they are great solutions. I probably would like to see one that is 100% focused on Bitcoin and Ethereum only, probably as collateral. And also, you can just require a bit more collateralization, right? So instead of maybe asking for 130 or 150, you can ask for 200% if you want, or giving 150% to Bitcoin and 200 to Ethereum as a collateral ratio. So I believe that is how it should be. And then there are different other algorithmic stablecoins. One that is quite interesting is Ampliforth. So they did this thing with the adjustment of the monetary base that is trying. Yeah, and that is a really cool idea. It has some issues on the UX side, because exchanges have. Imagine that you have. You are an exchange, right? You have a database that represents the amount of Ampliforth that you have in your wallet. Then what happens is that if there is a rebase, you have to actually run a procedure to rebase the balances that you have in the wallet. So that is one of the complications with the concept. We are in a really good discussion with the Ampliforth team. So we discussed a few times about this, and. But on the other side, I believe that is one really interesting and new solution that has some potential. I believe that those are the two main types of stablecoin that I find interesting.
Has anyone noticed that I got shadow banned on Twitter, and now Twitch keeps removing my camera feed? I'm getting censored by big tech. They're trying to take me down. What is going on?
The chat says you're getting shadow banned on both, you know.
Yeah, the big tech's trying to take me down. They're trying to get rid of the balls. I think it's a conspiracy. I genuinely have no idea what's going on. Maybe the camera's overheating. Apparently now I'm muted. So
you're not muted. You're good.
Well, maybe chat's trolling us then. But who knows? That's super interesting. So, while I was trying to fix my camera, I got a message from Nomad, and Nomad says. He has 2 "There is no need to be upset" Tether shirts to give away on the stream if we want to make up the terms on how someone can win. So there's some "No need to be upset" Tether t-shirts that are available to anyone that.
Yeah, and I've got them pulled up. He messaged me too. These are great shirts. I've seen them in person. My other podcast host I cheat on Cobie with, Josh Olsowich, has one of these. And it is a great shirt. Nomad's going to.
And the winner's just be me and you.
Yeah. I think that's what it should be. I need this shirt. This is ridiculous. We need these shirts, Cobie. So somebody.
Paolo, is it true that Bitfinex is actually just you, and it's an elaborate marketing technique in order to drive up hype around Tether and Bitfinex?
Of course, every even bad publicity is good publicity.
No one has the capacity to tweet so many times per day, if not for some financial incentive. So there is no other explanation.
While Cobie brainstorms how we're going to give these shirts away, somebody in the chat earlier asked, when Tether mints $1 billion, who presses the button to actually make it happen?
So, of course, there is no one person to press the button. It's a multi-sig, right?
Several keys.
Well, is how you would do that, right? So and a lot of people ask, why even numbers? That's a really good point, right? So people say, well, why you authorize tokens in chunks of 100, 200, 500 million, so on. So the reason is that given the sensitivity of the private keys that the signers have to handle, then we decided that the right thing to do for us was authorizing in bulk based on what we estimate could be the potential interest for the next several days. And we estimate that based on the requests that we have in the previous month or so. So we keep some authorized Tethers on the shelf, so we don't have every time to ask the entire signing group to take to access the private keys. It's simple as that, and somehow people think it's weird.
Chat is all chat spamming brr.
Yeah.
We get some brr spam in the chat.
Paolo, could we actually get you doing the burr meme?
Well, I have the R that is, I'm not sure how you say in English, but I really have a bad R.
We need the winding mechanism too, you know, like
the general counsel just sends him straight to jail.
We just need
all right,
one.
so
That's what the chat asks. We just need one burr.
We've been streaming for just over an hour. I'm actually kind of scared to do this, but I want to let the chat ask some questions. Ledge, you can select them so that they're at least moderated through someone with a brain. I'd love to have the
security
token.
Some people. Monkey Buy wants your opinions and plans about doing a STO security token exchange and what y'all think the future of security tokens is.
The short answer is almost there. The longest answer is that I believe that is one of the most interesting things that will happen in 2021. So we are working to get it out by the end of this year, and we are pretty sure that we will get there. It's pretty new, exciting market. A lot of the interesting fact is that many ICOs, many tokens went through extreme complexity just to not look like a security. And now that they are, security tokens, you can actually do really interesting stuff, right? You can actually raise money, create bonds and things like that are pretty cool. And you have, of course, the entire activity has to be fully regulated. So you have to choose a jurisdiction that is that has some that allows you to set up a framework with them, so you can do all the reportings that you need to do with the regulator, right? If you in equities you might need to report then if who has more than 5% of a certain stock, you have to report if in advance if someone with that has a big percentage or one that the shareholders decide to sell a good chunk of their stock and so on, right? So all these things have to be respected. So there is a lot of regulatory scrutiny and preparation that exchanges have to do. But I believe that there is a big rush in making that happen in 2021 and probably beginning 2022.
Straight Lolan asks, what are the risks to margin lending? So if you're actually lending assets out for a margin platform, what are the risks for the lender?
So the lenders usually are the one that are protected by every issue that is that is of course being hacked, right? So if there is a liquidation, you never touch the lenders. So you are an exchange, you will eat the loss. If your system was not able to cope with, or there was not enough liquidity, whatever, right? You as an exchange will eat the loss. You never touch the lenders. The lenders can only be affected on exchanges if there is an hack, but of course, because the funds are gone.
Bitfinex was one of the first to integrate Lightning. The question is, what can we expect from Bitfinex with respect to Lightning? But I'd love to hear a little bit also about how you see Lightning evolving. At the moment, sometimes it can be it feels like an old school crypto experience. Feels like sort of hard to use, or especially when the nodes are kind of old or something, or the channel's kind of old. How do you see it evolving over the next couple of years?
Yeah, so I believe that just in 2020 and beginning of 2021, there was a big leap in Lightning Network. So actually, I believe that many wallets came out. I think that there is Breeze, Blue Wallet. Blue Wallet is pretty cool. It's well done. The user experience is extremely smooth. So it's one that I would recommend in this moment. I think that Lightning Network just makes sense from an exchange point of view, especially when fees are so high. And with the growth of Bitcoin, hopefully we would expect fees to be probably a bit higher in the future. And Lightning Network is just the right solution. We processed, I believe, 12,000 transactions in Lightning Network just in February, and March is probably higher than that, quite higher than that. So our node is running at really well. Users are sending Bitcoin really fast, and especially when we will be able to support cross margin for our perps. You can shoot 0.1 Bitcoin through or 0.01 Bitcoin through a Lightning channel, get it credited in 1 second, and then open a position, right? So but aside that is also cool because the work that we have been doing with Bitterfield, and that is public, then we are actually, so Bitterfield, you can buy gift cards with cryptos. So we created an interface in Bitfinex so that our user could use their Bitcoin balance to buy gift cards, and we settle the transaction like in network, and it's running smooth since 1 year or so. And the more upgrades we use LND, the more upgrades to the node, the better it gets. So I'm pretty satisfied with our offering.
Do you think there will be a large segment of crypto users that are layer 2 only on both Bitcoin and Ethereum in the future?
Well, I think that if we go really mainstream, there is no way that so Bitcoin and Ethereum are not made to scale. There is no. I mean, when I talk to blockchain developers, they say, yeah, my blockchain makes 50,000 transactions per second. Okay, but fine, Bitfinex alone, if you try to bring all the Bitfinex volume on a blockchain, you are already sometimes we have 100 or 200,000 events per second. So you can even scale 10 times, and it will just allow 2 Bitfinex to run. So the point is that you have to work on layer 2 solutions and possibly make them in a similar fashion of like network. But also there are plenty of layer 2 solutions on Ethereum, right? The idea is that you have to possibly settle as less often possible on main chain, and the more people will join or will start using crypto as their layer to do financial transactions, the more the less frequent settlement should be, and I believe that will be more more layers, more better ways probably to compress metadata in order to keep the transaction being verifiable on the layer 1 if you want. But in the end, if that will be also a bottleneck, the idea is that you should also remove all the metadata from. There are already some projects that are doing that. You should also remove the entire metadata of all the transactions and just push the macro route in the main chain periodically, and you can have, as let's say, a side chain or like what we call it, like a channel that then the participant to the channel can verify. So there are plenty of ways you can really scale to different layers, and that has to happen on Ethereum or on any other blockchain that really wants to see mass adoption.
So Cobie, we have some ideas for the competition for the t-shirts. My proposal is, what if people draw Paulo Gobert meme? While you think about that, you finalize that. One of the other questions in the chat was y'all's thoughts on AMMs and DEXs. I mean, y'all are pretty early to the DEX game, and it's especially kind of trying to create a potentially hybrid experience for your customers when you created Bitfinex, and then now it's called Diversify. So, like, how do you imagine that bridge will work in the future? Do you think you want your customers to basically be able to be hybrid between DEX and centralized exchange, or how do you envision those working together?
So DEXs are, I believe that Bitfinex and Diversify was really is really good showcase of what you can achieve, right? So as said, you cannot expect to scale Ethereum so quickly to handle an on-chain order book. Apart from even if you don't think to things like front running and so on, just you running an order book on chain is I believe a failed experiment, it can just work for the moment, just because there is no much attraction and adoption. That's at least my belief, right? So I believe that the right way to do, and the way to bring 1 billion people to use a technology, is to keep using the good old technology that we developed till 3 years ago. That is a specialized platforms and solution, rather than put everything and your sisters into a smart contract. So that's the way it should work. So and even for a DEX, I believe that you cannot ever, from a DEX perspective, compete with the speed of a single purpose application that is a matching engine. So of course, it can work if you are, if you have your side chain that settles on the main chain. You can build your sidechain that is in a closed environments where nodes are, within 100 kilometers from each other, so that the speed of light is good enough so that you can simulate, a sort of closed blockchain, and you can simulate an on-chain order book, so that you can tell you that. But if you want to really provide an awesome service, you can provide low latency. You have to use a single process with multiple thread, with the custom data structure that do that as their main job, that has a latency of a microsecond or such, right? So that's how you should design things, and it's the only way to scale. So I was talking to a few blockchain developers, and they were saying, yeah, but if our main chain will get clogged, we will spin up a side chain. We will rent a data center, we will put 10 nodes there, and we will have our side chain that it will be, that will still be a blockchain, but will run really faster than the main chain, and we will put all the load there. And said, well, but if you rent one single data center, is like running everything on the same machine, for in my opinion. So I believe that if you can. You have really to use the technology that we built, in the last 30 years, and use blockchains for the reason why they were built. That is moving money or creating bonds between people, between programs, between bots, and so on. Trying to put the entire logic and everything on chain is the wrong approach from a pure, scalability engineer point of view. Cobie? I'm really passionate about this thing.
Yeah, you went for it.
That makes sense. I could tell you were passionate about it. I think for the competition, Ledge, I think your idea is good. They can either draw the Burr meme, Paolo Burr, or Paolo's sisters in a smart contract, which was the analogy that was just used. I don't know why my camera keeps rugging me. Apparently, I'm signaling something in Morse code, so I'd love to know what that is a bit later on.
You're a Russian.
Yeah. I need a stand-in for you with the glasses. We have that picture somewhere, but I didn't get noticed that your camera was going to go out constantly today.
Yeah, maybe I should figure out some backup in case it goes off. It's just me like this.
Yeah, standing there very still.
Yeah, so while people are drawing, we can probably have a couple of other questions. I saw one that said you mentioned you were interested in some privacy projects that are non-token, non-like degen orientated, simply just trying to build something interesting that will better the world in terms of privacy or self-sovereignty. Can people look into any of these? Can people research them? Are they private? Are you allowed to name drop?
So, an example that I participated to, and that Bitfinex built in collaboration with other groups, is called Bazaar. That is Data Bazaar. So one of my preferred books, and I suggest to everyone, and is The Cathedral and Bazaar, written by Eric S. Raymond. is basically explains how cathedrals are beautiful. They are really complex. Some cathedrals took hundreds of years to be built, and some are not even finished, right? So while bazaar, if you look at them, they are quite messy. They at the first sight they really look messy. They really look confusing. But actually, it's because there is a lot of redundancy. There are a lot of people that are maybe selling the same thing or different things. You see people running around all the time. This is the perfect analogy for peer-to-peer. And with the cathedral, if you remove a single piece of the cathedral, it's likely to fall down, right? If you remove a pillar, it's likely to fall down entirely. But with the bazaar, some of the sellers will not come to work, and one day, and there will be plenty of others. So there will be plenty of activity. Everything will continue to work. So. Well, the book was about also, microkernels and so on, but that's the analogy that is perfect for this also modern crypto world and the current application. So the way I see it is that this project, so the way we build Bazaar is a way to, sell data. So everything is data in our world. So, a way to sell data with whatever cryptocurrency you want. We showcase it with a couple of examples. One is Bitfinex terminal. So we are putting all our trading history there. Bazaar is based on a hypercore that is a streaming Merkle log that is a pretty robust and cool data structure that you can use to is one really fast, and two is always verifiable, and you can access it in a sparse way. So and on top of that, we, as a more complex use case, we built Bazaar Vision, that is a peer-to-peer video application in which is perfect for cam girls. You can see the other person and you can pay in Lightning Network directly. It works perfectly. We should have tried that.
Cobie will experiment later.
Yeah, I'm gonna be a cam girl later on. All right, you got it on the screen. Cool. And then the final question from chat, I was going to ask that one myself, so I won't ask it. I lost it.
It makes for good radio.
Yeah. How do you see the future of privacy coins like Monero, Zcash, and Grin?
So I think that Monero is a really well-engineered blockchain. So I believe that they will keep having their use case. I think that we might see more exchanges drop in support maybe at some point. I'm not saying that it will happen. I would hope not, because it would be a really bad signal. I believe that they should stay on exchanges. But I believe that is an important offering for users. And I don't really know. Some people say, why you should be private? What do you have to hide? But again, privacy is one of the fundamental rights of every person. So if I want to bring it to every single transaction that I do, I should be free to do so. And also, in some way, Lightning Network is not as private. There, most people use hubs, so their transactions are not that private. But also, there are. I believe that all the privacy-oriented communication tools should be supported in general.
And will you be speaking at DuskCon? I don't know if that's a real thing. I just read it from the chat. So if it's not a real thing, then I got trolled again.
Well, I mean, maybe they were. I don't know. The short answer is that maybe I will.
All right, maybe. The answer is maybe. So this fake conference that you just made up. All right, so I only have one more question. We've been streaming for almost an hour and a half. We asked this of every guest. Ledger, are you just going to figure out who wins the competition afterwards, and we'll send them it on Twitter?
I don't think anybody did, because nobody mentioned up only in the submissions.
All right.
So we get the
that means we get the t-shirts. If no one sends it in, we get the t-shirts.
I'll draw the Burr meme and we'll see how it goes.
Yeah. Paolo, we need some free alpha for the chat. The chat is not going to make it currently. They need something from you that helps them become a better version of themselves. Something that they can like take away and like either do to become a happier or more profitable person. Something they can go learn. Some wisdom that has been passed down by many generations and ended up with you, ready to transfer to these viewers on this Twitch stream. What is the free alpha for the chat?
All right. So my grandfather was always telling me that if you're working in a company, if you are part of a company, you should never look up how much the others are working, because the moment everyone starts worrying on how much the others are working, the company is doomed to fail. So you should just keep your head down, work as hard as you can, and you will build great things. My grandfather was a farmer, and he was producing the best fruit in all Italy, I can say.
The best fruit in all Italy is a pretty bold claim.
Yeah, I know.
So does that mean if you're a developer at Bitfinex, you can just do nothing and you'll never notice? Because you're like, I'm just keeping my head down. Like that guy
no. We
had months.
We had super serious control. But it's more like,
what was that, Ledge?
One of the folks in the chat said your grandfather was a yield farmer. Cobie, your silhouette just
we invented yield farming.
You invented yield farming in Italy. All right.
I'm back. I made it back.
You're back.
All right. We've done an hour and a half. Paolo, thank you so much for coming. Thank you for the free alpha. Keep your head down. Don't bother everyone if they're working. And if you work as a developer at Bitfinex, you cannot do anything and you won't notice. And if you haven't drawn the Burr meme or I can't remember who it was, someone in a smart contract, send it to @UpOnlyTV. You might win a Tether. There is no need to be upset t-shirt. Ledger, any parting thoughts?
I'm thankful you're here. I'm thankful you took over PR efforts for Bitfinex. You're doing a great job as a representative of the organization. And I'm also thankful for Blockfolio being our partner for this and all episodes of Up Only. Go to uponly.tv/Blockfolio. You can track your portfolio, your investments in Bitcoin and Leo and Tethers and other. You might even get a Tether when you trade on Blockfolio in response to a trade. They've got all the features you've loved since 2014 for portfolio tracking as well. It's been a pleasure having everybody with us today. Bye-bye.
Thank you, Cobie. Thank you. Bye-bye.
Ciao. Bye.